Everyone, welcome back. So today we're going to be taking a deep dive into something that could really trip people up in the crypto world. Yeah, we're talking about bull traps, these moments where it seems like the market's about to take off, but it's actually a setup for a big fall. We're dissecting an excerpt today that breaks down exactly what bull traps are, why they happen, and most importantly, how to avoid falling victim to them. So whether you're a seasoned crypto trader, or you're just starting out, and or if you're just fascinated by the whole psychology of markets, this deep dive is for you.
You know, what's really interesting about bull traps is they're not just something you see in crypto. We see them across all sorts of markets, stocks, real estate, heck, even Beanie Babies back in the day. It all comes down to, our human nature, those basic instincts, greed, fear of missing out, all that good stuff.
It's like our brains are kind of hardwired to see patterns, right?
Yeah.
And sometimes those patterns lead us right into a trap. The excerpt we're looking at today actually uses this great analogy. It compares bull and bear traps to, actual traps.
Yeah, it's a really fitting comparison because both of these traps, they really exploit our biases. Like a bear trap tricks you into thinking the market is crashing and then bam, it rebounds. But a bull trap that lures you in with this promise of, continued growth, but it's all a facade, a carefully constructed illusion, really, designed to basically separate you from your crypto.
It's almost like it's like a chess game.
Yeah.
A game of market chess.
Right.
These experienced players setting up these elaborate traps to catch those who aren't as experienced.
Exactly. And to really understand these moves, we need to kind of dig deeper into the psychology behind them. What makes bull traps so effective is that they prey on our natural desire for quick profits. We see the price surging, and our brains light up with all these dollar signs.
It's like that gambler's mentality, always chasing the next big win, even when the odds aren't exactly in our favor.
You got it. And it's that emotional vulnerability that's what makes us susceptible to these traps. And our source material actually gives us a kind of chilling example. Remember that fake news story about a certain country? And I'll just say, it definitely wasn't my home country, but adopting Bitcoin as legal tender.
Oh, yeah. That caused a total frenzy. I remember seeing it everywhere on social media. People were freaking out, scrambling to buy Bitcoin before the supposed price skyrocket.
And that's exactly what the manipulators wanted. They created this frenzy, artificially drove the price up, and then poof, the truth came out, the price tanked. And anyone who bought into the hype was left, holding the bag.
Yeah, it's a tough reminder of how quickly misinformation can spread, especially in the crypto world, and how easily it can manipulate the whole market sentiment. But let's face it, even without blatant fake news, there are plenty of legitimate news stories that can trigger bull traps.
You're absolutely right. I mean, the 24/7 news cycle in crypto, it's like constantly on. Creates this state of flux, right? Positive news can lead to a surge in optimism, pushing prices up prematurely. And then just as quickly, negative news can trigger like panic selling, leading to a crash. So figuring out the genuine market trends from these temporary blips, it's absolutely crucial.
Yeah, it's like walking through a minefield of information. Some of it's valuable, some of it's dangerous. A lot of it is just, noise. Our source highlights three main reasons why these bull traps occur. Recent news, both real and fake. Rug pulls, which honestly, just the name sounds terrifying. And of course, the infamous FOMO. So let's break down each of these, starting with maybe the scariest one, those rug pulls.
Yeah, rug pulls. Imagine this.
Sure.
You put your hard-earned crypto into this promising project. Sounds great, right? And then you find out the developers were basically wolves in sheep's clothing. They pump up the token's price, generate all this hype, and then when the time's right, they disappear with all the funds, leaving investors with, a worthless token.
Oh, wow. So it's not just about the market naturally correcting itself. It's about deliberate manipulation and deception.
Sometimes, yeah. It's a harsh reality of the crypto space. It's full of opportunity, but it also attracts, some bad actors. And these rug pulls, they can be really sophisticated. Even seasoned investors get fooled.
So how do we protect ourselves? I mean, if even the pros are getting tricked, what hope do the rest of us have?
Don't worry, there's hope. The key is thorough research. Don't just get caught up in the flashy website and the promises of huge returns. Dive into the project's white paper, really scrutinize the team's credentials, analyze the tokenomics, look for red flags, like anonymous developers, vague roadmaps, or promises that just sound, way too good to be true.
Right. If something feels off, it probably is. It's like walking down a dark alley. Sometimes your gut instinct is telling you to turn around. But research takes time. And sometimes that FOMO monster, it just takes over.
FOMO. perhaps the most powerful driver of these bull traps. It's that feeling of urgency, the fear of missing out on the next big thing, and it can really cloud our judgment, lead us to make impulsive decisions.
It's like that frenzy you see at a Black Friday sale, you know, people scrambling over each other for the best deals,
Yeah.
even if they don't even need the stuff.
Exactly. And in crypto, FOMO can drive prices to these unsustainable levels, creating a bubble that's, just waiting to burst. And as the prices climb, early investors, they see a chance to cash out, which triggers this cascade of selling. And that traps all those people who bought in at the peak.
So we've got news, both real and fake, then these rug pulls designed to deceive, and then FOMO pushing everyone to make quick decisions. It seems like these bull traps are, kind of everywhere. How do we navigate this minefield and actually come out on top?
That's the million-dollar question, isn't it? And that's exactly what we'll get into next. There are strategies out there, both technical and psychological, that can help us spot these traps and avoid them. But it all starts with a shift in mindset.
Sounds like we're about to level up our crypto game. Can't wait to hear more. Okay, so we've seen the darker side of bull traps, the misinformation, the rug pulls, that FOMO feeling. Now let's switch gears a bit and talk about how we can actually navigate this whole crazy landscape. What's the most important mindset shift we need to make to avoid becoming another bull trap statistic?
I think it really boils down to detaching our emotions from our investment decisions. Easier said than done, right? But it's absolutely crucial. When we let fear and greed kind of take the wheel, we become, easy targets for those who are looking to exploit those very emotions.
Yeah, it's like that old saying, right? Fear and greed are the two biggest enemies of the investor. But how do we actually put that into practice? I mean, it's one thing to say, okay, I know emotions can cloud my judgment, but it's another thing entirely to actually override those feelings when things are getting heated.
You're absolutely right. One really helpful tool is to create a pre-trade checklist, basically a set of objective criteria you use to evaluate any potential investment. This checklist should include things like, analyzing the project's fundamentals, really looking into the team's background, and assessing the tokenomics. By having this objective framework in place, you're much less likely to get, swept away by all the hype and the FOMO.
So it's about having a system, a set of rules that we stick to no matter what. No matter how we're feeling. It takes the emotion out of it. Our source also talks about the importance of timing and research. Can you talk a little more about that?
Absolutely. A classic bull trap setup usually involves a sudden, sharp price jump. It seems like it comes out of nowhere. This often happens on low volume, which means that only a small number of traders are actually driving the price up. Experienced investors, they know that a sustainable bull market is built on, gradual organic growth with increasing volume and participation. So when you see that parabolic price surge, don't just jump in right away. Take a step back, analyze the volume, and really do your research on what's actually driving that price increase.
So it's not just about WH when to buy, but about WHY, the price is moving. If the fundamentals don't support the price action, that's a big warning sign. But even with thorough research, it can still be tough to predict how the market's going to react.
That's true. And that's where technical analysis can be really helpful. By studying price charts and patterns, we can sometimes spot potential bull traps before they spring. For example, a bearish divergence, that's where the price is making higher highs. But a momentum indicator, like the RSI, the relative strength index, is actually making lower highs. This can be a sign that the upward momentum is weakening, and a reversal could be coming.
Okay, so we're combining fundamental analysis, looking at the project itself, with technical analysis, studying the price charts. It's like having two different lenses to view the market through. It gives us a much more complete picture. But let's be real, even with all the research and analysis in the world, there's always that chance we could misinterpret things and fall into a trap.
Of course, that's why it's so important to manage risk effectively. And one of the most powerful tools we have for that is the stop loss order.
We talked about stop loss orders a bit earlier, but let's dive a little deeper.
Sure.
Remind me how those work and why they're so valuable in this old bull trap scenario.
Sure. A stop loss order is basically an instruction you give to your exchange to automatically sell your asset if the price falls to a certain level. It's like setting a safety net, limiting your potential losses if the market goes against you. So for example, let's say you buy Bitcoin at let's say $30,000. But you're worried about a potential bull trap. You could set a stop loss order at, say, $29,500. That way, if the price drops below that level, your Bitcoin is automatically sold and your loss is limited to, to just $500.
I see. So it's not about, trying to time the market perfectly,
Yeah.
but about having a plan in place to protect yourself. But what about the different types of stop loss orders? I've heard things like trailing stops and stop limit orders.
Right. There are a few different options. A trailing stop. That's a dynamic stop loss order. It adjusts automatically as the price of your asset moves up. So for instance, you could set a trailing stop at, let's say, 5% below the market price. As the price goes up, your stop loss price also goes up, which helps lock in those profits. But if the price reverses and starts to fall, your trailing stop will trigger selling your asset and protecting your gains. Then you have a stop limit order. This combines a stop loss order with a limit order. So you can set not only the stop price, but also the minimum price you're willing to sell at. This gives you more control over your exit point and makes sure you don't sell below your target.
Wow, there's more to stop loss orders than I realized.
Exactly. Picking the right type of stop loss order really depends on, your own personal risk tolerance, your trading style, and the specific asset you're trading.
Okay, so we've talked about setting up that pre-trade checklist, analyzing both the fundamentals and the technicals, and putting those stop loss orders in place. These all sound like really solid strategies, but I can't help but think about the psychological side of things. How do we stay disciplined when the market's going crazy,
Yeah.
and everyone around us seems to be making a ton of money?
That's the real test, isn't it? And that's exactly what we'll explore next. Remember, the most successful traders aren't the ones chasing every little pump and dump. They're the ones who can stay calm, stick to their plan.
And make rational decisions even when the market feels like it's on fire. So it's all about mastering our emotions, cultivating that inner zen, even when the crypto world feels like a roller coaster. Bring on the zen, I say. All right, so we've dug into the mechanics of these bull traps. We've talked about the psychology behind them, why they work, and we've even equipped ourselves with some strategies to navigate them, to avoid falling for them. But before we wrap up this deep dive, I kind of want to shift gears a little bit and talk about the role that we each play in shaping a healthier, more resilient crypto ecosystem.
I think that's a really important point. Bull traps, they don't just affect individual traders. They can have this ripple effect across the entire market, eroding trust, fueling skepticism.
Yeah, it's like a virus, right?
Yeah.
Spreading that fear and uncertainty,
Right.
making people question every price movement.
Exactly. And that's why it's so crucial to foster a community of, informed, discerning investors. The more we educate ourselves, the less vulnerable we are to manipulation and hype.
Right. It's about shifting the power dynamic. Instead of being, passive participants just getting swept along with the whims of the market, we become active, informed decision makers.
Exactly. And this collective awareness, it can have a huge impact on market dynamics. When a critical mass of investors are basing their decisions on, solid research and analysis, the market becomes more stable, more reflective of actual value, and less prone to those wild swings driven by speculation and manipulation.
So it's not just about protecting ourselves, right? It's about contributing to a more sustainable, more trustworthy crypto space for everyone.
Absolutely. Think of it as a positive feedback loop.
Yeah.
As more people adopt that critical, informed approach to investing, the market becomes less attractive to those who are, looking to take advantage. It's like raising the bar for entry, creating this higher standard of due diligence and accountability.
I love that analogy. It's like we're building a stronger immune system for the whole crypto market.
Exactly. And the shift towards, greater awareness and responsibility, it's already happening. We're seeing more educational resources, more in-depth analysis, and more critical discussions within the crypto community.
Yeah, it's encouraging to see that evolution taking place. It kind of shows that the crypto space is maturing. As more institutional investors come in, as regulatory frameworks develop, there's this natural push towards greater transparency and accountability.
Absolutely. And that increased scrutiny, it's going to force projects to up their game, to really focus on building genuine value instead of relying on hype and empty promises.
It's like a natural selection process for the crypto world, weeding out the weaker projects and letting the truly innovative and valuable ones, letting them thrive.
Exactly. Those who adapt, who prioritize transparency and community engagement, they're the ones who will ultimately succeed in the long run.
That's a really powerful message to leave our listeners with. So as we wrap up this deep dive, I want to challenge each of you to think about your role in all of this. How can you contribute to a more informed, more resilient crypto community? How can you use your knowledge and insights to not only protect yourself, but to also, guide others towards making smarter, more responsible investment decisions?
Yeah, it's a collective effort, and every contribution counts no matter how small, whether it's sharing educational resources, engaging in constructive discussions, or simply holding projects accountable for their promises. We all have a part to play in shaping the future of this exciting, transformative technology.
Well said. And remember, the learning never stops, right? Stay curious, stay informed, and never be afraid to question things. Thanks for joining us for this deep dive into the world of crypto bull traps. Until next time, happy trading. And may your investments be wise and your profits be plentiful.